Hey, what's up, everybody? Welcome to the Friday weekly close live stream. I'm Norok, aka Wes, and I do this every Friday, 4 p.m. on Discord TradingView, which I love, and I do all my charting on, and YouTube. And they don't pay me to say that. I really enjoy working with TradingView because it lets us do so much as price action traders. And price action is going to be the focus today, as it is on every day. But I'm going to use a kind of a juxtaposition of price action versus financial media. In other words, what you read on a regular basis, specifically about gold. Now, gold's been around for a couple of years now. It's been around a little bit longer than cryptocurrencies, but there's always been a hype to gold. It's always been sort of the antidote to chaos. And there are a few very prominent personalities. One of my favorites is, of course, Peter Schiff, that talks about how the economy is just going to collapse every single week. Every week, it's some new story. And he was right in 2008. But then again, if you think about it, if his whole shtick is talking about how the economy is going to crash, inflation is going to turn into Zimbabwe every single week, then when we do have a major recession, he can go back and say, hey, I was right. But what about, when you call for a recession in 2020, 2011, 2012, 2013, 2014, 2015, 2016, 2017, 2018, 2019, 2020, 21? It's basically, the point is, he's correctly predicted two of the last 50 recessions, or excuse me, I got that joke backwards. He's correctly predicted 15 of the last two recessions. And that's something I want to challenge here, because I don't think that kind of narrative is particularly useful for making money. And one of the reasons I do this live stream is to sort of crowdsource ideas, hopefully from viewers. I got people that, watch it on a regular basis that give me ideas to look at. And then I can give my own analysis to it and hopefully teach from past examples and look at potential opportunities as they're coming up. So just a quick plug. If you are on Discord, by the way, links to all that stuff is below per usual. We use the Just Chatting channel to ask questions over there. And of course, if you've got questions, if you got symbols that you want to look at later on the live stream, I'll get to them, because normally I spend the first half talking about what I think is important this week to talk about. And then we'll look at individual charts of things that people want to look at. So get those in the chat. I will get to them in due time, as I do every week. And I'll stay as long as you guys give me stuff to talk about, because I really enjoy doing this. I want to do these to teach what I think is valuable. And if this is your first time watching, or if you're watching, after the live version, I really try to keep things very simple with price action analysis. There's two things that I trust the most. Those are 50% retracements of trends and false breakouts. And those are so incredibly powerful, far more powerful than reading the news and trying to divine what the future is going to be, what you should buy. It's just better. I'm just going to say it. Using price action is better than trying to consume all this biased information about what the future is going to hold based on people's opinions, which are oftentimes influenced by how they're getting paid. Like I was saying, one of my favorite gold bugs, Peter Schiff, he sells gold. He has a company that sells gold. They take a commission every time they sell gold. Whether it goes up, whether it goes down, they make money. So by whipping up fear, he makes money in people. And he's been very consistent about this for all the years that he's been doing that. And the reason I'm talking about gold so much is because if you watch my live streams consistently, and I do these every week, 4 p.m. at the end of the week. Sometimes I go on vacation, but mostly every week. Since May, we're looking right now at GC1, which is the continuous futures contract on TradingView. And if we go back to May of this year, specifically the week or the day, Friday, May the 5th, I could go back into my archives and I could pull up that. Maybe I should have done that in my prep to play a video of that. But essentially what you had is one of the key things that I trust in price action. That is a false breakout. In other words, price tries to break higher in this example. It can be either a low breakout or a high breakout. But in this case on gold futures, and what did it also do in GLD on May the 5th? Let's just take a look. May the 5th. Oh, yeah. So right after May the 4th be with you, May the 5th. Yeah. So you also have exactly that same kind of price section on GLD, the ETN, exchange traded note that represents gold. So whatever you want to play, futures, options, had to be long term because gold moves like the people that own it, old people. So what you had in April, Thursday, April the 13th, was a high on GLD that was 190.44. And then on May the 4th, be with you, it tried to get above that level and failed by that Friday the 5th. Let's go back to the futures because I really prefer to use futures. The underlying price, that's the most consistent thing to use when you're trying to assess like a commodity, is the futures, I believe. And so we had that same high on Thursday, April 13th. And so by that Friday, the live stream on May the 5th, I saw that we had a false breakout. Now, what's showing here, this highlighting with all these little numbers, median, ATR clear, that is an indicator that I made. It's called spike alert. And, you know, like most people that do live streams, most people that do stuff like that, they want to charge you for it. I think it's so useful. I give it away for free. I don't care because I'm a professional trader. I make my money trading. I don't want your money. I really don't. I want to tell you what's useful to give back to kind of dissuade a lot of what I see out there in the industry of charlatans, basically, where, you know, they're like, oh, buy this indicator. It's going to be the best thing ever. You know, and then people buy it and then it doesn't work and they go on to the next guy. Looking for price, the fundamental premise of this is when price goes up and tries, let's see if we can go down to a lower time frame even on that day. Let's go down to the 1 hour. That's another thing I love about TradingView is we can go back in time to May of this year, and we can even go down. I don't think we can go down to the 1 minute. Can I go to the 1 minute? But right here around 6 p.m. Eastern time, GTC -4, something happened, and price shot up on gold that day. It was Wednesday, and it failed to really punch higher. Now, you don't want to see this if you're going long, okay? So imagine you're somebody that bought into this breakout. It shoots up, and now it's starting to sell off. Well, what people do in those situations typically is they panic. They liquidate their positions, and that's the whole fundamental premise of why I like to look for false breakouts, because everyone thought it was going one way, and instead it went the other. And then I wait for one more additional confirmation. And by the way, if you want the little indicator, the spike indicator, just message me on TradingView or on Discord with your TradingView username. I'll give you access to it and a link to it. A lot of people ask me this week for it, and they ask me, like, what other indicators would you say I should use? And it's okay to ask me those kind of questions, but I'm going to give you my answer from a decade of doing trading, which is you don't need to keep adding indicators. Stop it. Stop it. You're never going to engineer a 100% solution. If you don't like mine, don't use it. But use it in conjunction with maybe one other indicator. Maybe you have a stochastic or an RSI or something like that. That's fine. That's fine. But don't just keep putting indicators on a chart. So if you ask me what other indicators do you use, I'll tell you, I just use 50% retracements and false breakouts. Maybe I'll use Ichimoku for some sentiment analysis, which we'll go into a little bit later. But this is just so freaking powerful. Because by the next week, you know, I remember this was Friday when I looked at this on the live stream, and it comes up, and the next week, Monday comes in, gives us an entry point, which is that red line, which is based upon Ichimoku. And basically, we want to be short. We want to be short off this. We want to recognize that this thing tried to break out, could not. Not to mention, it's at a major high that it made, close to where it made in August of 2020, close to where it made in March of 2022. But the problem is, if you start trying to get information from, you know, Zero Hedge, which I love, but, you know, it's people talking about how gold's going to beat, you know, the current modern monetary theory. It's gonna work. And maybe it will. But as a trader, as a we'll call it medium term investor, you need to be aware of this kind of price action. Maybe 10 years from now, gold will be higher. Probably it will, based upon history, okay? But you don't need to be buying it at that kind of a high. The Everything Collapse, authored by Egon von Greiser of goldswitzerland.com. These people are selling gold, and every single week on Zero Hedge, I see some article about why you need to be buying gold. Peter Schiff, this week, my favorite guy, the entire economy is about to implode. I mean, that kind of stuff, of course, gets hundreds of thousands of views. And every single one of these weeks, he's telling people to buy his gold. Meanwhile, in May, I can sit here with my little small reach as a price action trader, which isn't nearly as fearful, inducing, or compelling, but far more useful, and say, hey, look, this thing did a false breakout, and I'm going to take it short down to 1850. And I've waited for a couple of months, and basically today we really started getting really close to that target. Maybe I'm being a little presumptuous here, but this is a nice May to September, probably into next week, which is October. This is a 5-month trade that I put on in May. I never know where things are going to go. If you would have told someone in May, after a big old bull run like so, from all the way from October up to here, they would have said, oh, you're crazy. Gold's going to break that high. Well, it didn't. But the whole point of me sharing this is to demonstrate, to teach from this particular price action method and how useful it is on anything, crypto, stocks, commodities. Look for price to fail to break out, and then look for a reversal. It's just that simple. It's just that it doesn't happen every day. It's not going to happen on every time frame, but it takes patience. But it's far more useful than reading people's dire predictions about the world and being fearful than them buying the antidote that they want to sell you. In this case, it's gold. People want to sell commissions on their gold, and I don't think it's particularly useful. That's why I do this live stream, because I want to share what I think is particularly useful. Now, this is a historic example. We've got some stuff we're going to look at today when I go through all the other market stuff, and particularly in stocks. And we'll talk about that. But like I said, if you have questions, if you have symbols to talk about, put it in the chat. The chat I use on Discord is just chatting. So, no, I don't think I will long 1850. I'll have basically a trailing stop. And if it gets stopped out, then we'll see what happens there. But that's just basically the first target. I'm gonna presume short, because if we look at gold in this context, let me clean it all up because I like nice and clean charts. What it did, if we go back to 2018, long term, August 2018 up to the high in August of 2020, basically a 2-year trend, bull trend, which a lot of people I'm sure were very excited about. Came down, hesitated, and then finally hit the 50% retracement. Again, the other thing that I trust, because it works so damn well. 50% retracements of major trends. Not 38.2, not 62.8, or 61.8. I know those are all Fibonacci's people love to teach, but I like to keep it simple, and it's all I need. And so it basically found support back in October of 2022, held there. And you know what? If this thing was bullish, think about this. I've had this question a couple times this week. On my Discord, I have and by the way, Discord's free. I'm not going to charge people for it. My manager would tell me I need to, but I don't really care to, honestly. The irony is, people that do charge classes and charge Discords, people tend to actually flock to those, even though I don't think they're getting nearly as valuable information as what I'm trying to just give to people because I want to. The irony is, if I charged, probably more people would. But thank you for being here, and this is going to be a lot more valuable, trust me. So I've had a lot of questions on Discord about when price gets to one of these retracements. What happens if it hits it multiple times? I think you have to imagine, the answer to this question is this. Imagine a trade or an investment you've been in that has just gone. It has just gone up. It has mooned. It has just never given you any cause for alarm. That's the kind of trade we want to be in, right? We want to be in something that just keeps on going up and up and up and up and up forever, forever and ever and ever. So whenever price comes down, hits a level, and then goes up, let's say that we bought it here. Okay, I need to go to a black screen. That's hurt my eyes, maybe yours too. All right, let's do GC on this. Clean it up. Boom. Okay, go back to the weekly. All righty, there we go. So our 50 from August of 2018 to here, 1628, and it goes up and gets to a potential high and stalls out, and now we are where we are today, where it's starting to fall off. If it was bullish, if it was really, really strong, it should have gone. It's just that simple. It should have gone. I don't know what it's going to do. I'm not saying it can't get back up there, but if it was a really, really strong trend that we wanted to be in, it should have broken that high. It should have given us some kind of strength above that. You know, an example of one of the positions that I've been in for the year is Caterpillar. You know, Caterpillar, at least, when it came to its COVID March low to its all-time high of 21, down to its 50% level at 167. This is an example where it did actually break through the high, pull back to another 50%, and went up. This is strong. With gold, I just don't have that price action above those highs to tell me that people bought it up there. And so as it comes back down to this level, I see this as enough of a potential support that I want to take profit on a short, but not that I want to flip net long. I would rather hold on to some of my short with less risk and see if it comes all the way back down to 1640. I'm not saying it will, but since I'm already in the position, I already have profit off the table, I feel comfortable letting it do that. I'm not going to sit here and read a crystal ball and tell you you're going to predict the future with technical analysis. I use it to find low risk, high reward technical setups, and you go with it. They work, they don't. At the end of the day, you play it disciplined enough, you're going to make money. That's what it's all about. It keeps me disciplined. I look for these false breakouts, so I'm not taking every single field that I have. I look for 50% retracements or major highs and lows so that I know when and where to take profit. And I base all that around 3-to-1 risk-reward ratios, such that when this trade was put on, based upon the spike, you'll notice I have a little cross up here. This is how I use it, why I draw that. The entry point is going to be on that red line, which is the Tinkinson from Ichimoku. That is built in. The target is going to be down so. That gives me a 3-to-1 risk-reward ratio, almost perfection. And the high, if it breaks that high, if price trades above that high that it made in May, I'm out. That's my risk. So I know what my risk is. My risk was about 60 points, and my reward is going to be about 170 points. It's just that simple. 3-to-1. Do that again and again and again. It's like playing at the casino, playing the house. Odds are in your favor. So that's gold. And that's what I want to talk to. Every week, I pull up Zero Hedge to read the news. I don't really go to CNBC that much, but you're going to see somebody talking about how everything's going to go to crap and you need to buy gold. And it's hard for me. Well, it's not hard for me. It's bemusing to me to sit here in a short position about gold and watch my short position build up while everyone's saying buy. And I'm just, the technical setup in May said sell. And it works a lot better than whatever this person has spent a whole essay writing about. Maybe I'm wrong. Maybe the future is dire and, the reptile people are going to show themselves and enslave us all, and then I don't think it will matter. I don't know what people's doom scenarios are, but I read them every day. And they don't really tend to pan out that much. We had a pretty bad scenario about, 3 years ago. I mean, I've already forgotten it now, as most people have. There's a little couple of coughs and stuff like that everybody had, and we basically decided that we didn't want to have freedom anymore. And now we've pretty much forgotten that and gone back to normal. So we got to come up with new reasons to be fearful. And right now it's inflation. It's inflation, inflation, inflation. But I'll tell you something, having just finished a renovation, building products, definitely high. But I just bought a pork butt that I like to. I like smoked meat. I bought a pork butt for $12 this week. Last year it was 20. So I don't know if pigs suddenly got cheaper, but I'm not convinced that we're living in Weimar Republic, Zimbabwe land right now. But if you're selling gold and you're trying to make people afraid of inflation, if you're trying to pump up this price, that's what you're going to keep telling people. And I don't think it's particularly useful. So, hello, Aimer. Good to see you. All right. Let's see if we got any questions here on the chat. So, my day is very good, Richard. Thanks for joining me. Had a good week. Next week, I may be off, by the way, because I'm going on a little vacation. Yeah, we'll get to AMD here in just a second. And, of course, we'll look at Casey's breakouts. So this is all hindsight. I really have a pet peeve against talking in hindsight, especially as traders. You know, traders will say, like, look at this position I did. Well, if I hadn't have been talking about it every week, and if I hadn't had a live stream where I said I'm putting this on, then I wouldn't have even mentioned this, but I did. But let's talk about actual opportunity right now. I have to note that the S&P 500, SPY, ES futures in particular, opportunities here. Opportunity is knocking, and things have been pretty dismal this week. There's apparently some things in the news, and I've been trading for over a decade now, and every time we get to this point in government where it's going to shut down, everyone acts like that's just the worst thing ever. And I think we've had a pretty long government shutdown ever when it was. And the most stark thing about it was that nothing changed for anybody. A bunch of federal workers got a vacation. They still got paid for it anyway. We apparently had signs up at national parks saying that we couldn't go in, that, as a hiker, you just kind of walk around. And then everything goes back to normal. It's basically, there's nothing else to be afraid of right now. Nothing else to explain why market go down. Still up for the year, by the way. But we hit a major 50% retracement this week. This week. We got to take note of it. So here's the low. And another question I want to talk about this week is how to draw the 50% retracement, because that's important. And I do have a right answer. Sometimes it gets murky, and we'll look at that. But in the case of the S&P 500, it's very clear. We want to draw the 50% of the trend that got us here. Now, we could use the whole year. We could go all the way back to October. But I think the most easily identified trend began, because this is really a consolidation right here. We had from January until March of this year, we had just a little range. And then really the swing low of that range was in March. You remember when banks were going to fail? Remember that? Remember when, that was the reason that all the news was so abysmal, why the dollar was going to fail? You remember all that? Remember that best time for 2023 to buy stocks, when everyone was freaking running around with their hair on fire, thinking that this was finally it and we're going to resume the bear market of 2022? You remember that? No, seriously. Remember that. Remember that. Because unless you can put on long positions when the news is just unequivocally bearish, you're never going to have outsized returns in the market. You're not. That was a classic Warren Buffett, blood in the streets, greedy when other people are fearful kind of situations, was March of this year. Just go back. If you can, go back in your memory, do a little meditation, whatever. Keep a journal would be helpful. Go back and see what kind of conversations you may have had with friends on Discord or online or in text about the markets. Really lock in what was going on then, and then realize that was a major low for this year. That was the time to buy stocks this year. Think about that. And so now we have all this negativity, but basically that low from March up to the high, and I call this affectionately the my portfolio is back high of 2023, because for the better part of 2 years, since 2020, the end of 2021, people have been sitting in some ouch, it hurts kind of portfolio action. And then by around, summer, mid-July, people's portfolios were back. So I call this the, hey, I'm all right again high. And then, of course, now we have a pullback. But the pullback brings us to a very important level on several technical aspects. The 50% retracement of the low to the March banks are going to fail low to the my portfolio is good high is right here at ES value 4307. It's also in this range of the highs from Q1. I love it when things line up like that. If we want to do this in SPY terms, I think we might be a little off there on SPY. Yeah, SPY hasn't quite gotten there, but that's one of the reasons I use futures. So this is a key support level. And furthermore, this week we had one of my favorite indicators, which is the false breakout. I call this a secondary spike because it took 2 bars to get back above it. But this kind of little action right here, this little dip down, and then it finds itself some support here at 4307. That's the kind of stuff I want to see happen at a support like this. So this is worth going long. Hashtag not financial advice. But if you're going to look for another opportunity after March of this year to take us into the end of the year, this would be it. This would be it. This is worth it. At no point before am I going to condone anyone trying to buy maybe this dip back in August. But now that you actually come down to a level, I think it's good. I do. And I put my money where my mouth is there as well. And we'll see what happens. Where am I wrong? I'm wrong if we give up Wednesday's low. Now we're going into October, and one of the things that I think people should be aware of as we get into mid-October is going to be the October CPI print. I prefer price action over fundamentals, but this is going to be a very important fundamental event. It has historically, recent history, been a major important event. This spike right here, this false breakout down here, this spike indicator from October the 13th, 2022, that was the CPI print for last October, and that was the turn of the market. Incidentally, that also occurred at the 50% of the COVID low to the all-time high. Well, very close to it. SPY 100% hit it. You'll see that's why I'm going back and forth on a lot of these to confirm. Boom. 50% retracement of the entire S&P 500 was 349, and that was on that CPI of last year. So not only is this going to be a 8:30 to wake up for and try to maybe get some futures volatility price action in there, but it's also going to be a major defining moment because of what the Fed said week prior, where they are watching the indicators to know if they should increase interest rates or keep them the same. They're still trying to get us down to 2% inflation. If you listen to the gold bugs, they're never going to be able to reach it. But that's what they're trying to do. I think they wake up every morning and they say, they put on their suit and they're like, I'm going to do what I think is best to get my job done, which is get inflation to 2%. Yeah, some people, they're like, they're licking their eyeballs because they're lizard people and they are thinking, how can I enslave the humans? No, I think the Fed is just waking up every morning like you do and wanting to do a good job and doing the best. Their best. I know it's an unpopular opinion. I know it's not as intriguing as saying that there's a big, vast conspiracy that's trying to all keep us poor. But I think more likely they're just like you and I. They wake up in the morning and they want to do good. Nobody wants to wake up and say, I'm going to be an asshole today. Well, maybe some people do, but I don't think many people do. But they're going to try to get to that 2% inflation, and they're going to be looking at that CPI. And the market knows that they are going to be looking at that CPI. So if CPI stays the same, no change. We'll see. There's going to be volatile, so be there. Let's see, what day is that? calendar. The CPI for October is probably mid-October. Oh, yep, it's going to be October the 12th, Thursday. Thursday, 8:30 a.m. Eastern Time, UTC -4. So I'll be up for that. I may even stream that because I think this is actually going to be a very big event. Previous 3.7, we don't have a forecast yet. Forecast being what the market thinks is going to be. But it has been the whole thing that people are focused on now, the reason doomsayers are, having doom to say is because this is the chart of CPI going back to, let's bring it up a little bit. So, 2020 was, of course, the late sneezy flu. And inflation in July of 2022, the CPI was all the way up at 8.8. It's pretty damn high. Made everyone think it's going to keep going up forever. And then it started going down. It's really hard to sell people on doom when inflation's getting better. But we had it tick up. Now this, and people were saying, well, all this recent going down, that's as low as it's going to go. And we'll see. But you can see how important it is. But, I mean, was this thing ever going to go in a linear line anyway? What chart ever goes in a straight line down or up? It has pullbacks. I'm not saying we need to chart the CPI, but maybe we should. So I think that this week was the turn. Could be wrong, but I think this week was the turn. And more importantly, it happened at a major support, and it gave me a low risk, high reward entry. In other words, the way I would chart this trade out is based upon that. This is a 2-hour chart of the futures from Wednesday in the afternoon. Swing low, got back up inside this support. The long is at 43.07 on ES futures. Stop, a good tool cancel order down below that low. And then my target is going to be, my first target is going to be, as always, the 50% retracement of the leg that brought us down here. We're not going to use the whole thing all the way up here. We're going to be conservative and say that the first target is going to be at 44.2150. And what do you know? That gives me a 3-to-1 risk-reward ratio. Would have loved for it to go there straight. Had a little pullback today, but I'm cool with it. I'm cool with seeing what it does at this support. And there's plenty of people out there thinking that this is going to be the end, that I think that this is a good long to take because it is in spite of a lot of bearish sentiment. And you have to take longs when a lot of people think it's bearish, because that's why price is low, because people think that it's going down. If you think the economy is doing great, if you think that, poo-poo coin is going to go to $1 million, then of course the price is going to be high. Speaking of coins, let's look at crypto. So Bitcoin is doing a whole lot of continued nothing, but it has been one of the best examples. Someone asked me, what indicators can I use to trade crypto? And my answer this week was, of course, 50% retracements. And the reason for that being the fact that right now, all year long, what has defined Bitcoin has been 50% retracements from the low of FTX down to the March banks are going to fail, which for some reason Bitcoin went down as well. That 50% retracement at 20K roughly, that was one. And then the next leg up from that low up to the high in April was yet another 50% retracement. And then the reason that I am short and bearish on Bitcoin right now is because from the March 22 high down to the low right chair is a perfect hit of the 31,859 level. Boom, 50% of that segment of the leg down. That's resistance. And then, of course, where are we at? We are back now at the 50% of the March low to that high, holding there at basically 25,700 thereabouts. And furthermore, what's holding it down is inside this 50% right here. Couldn't ask for a better example of how, yes, you can properly find supports and resistances in Bitcoin. But I have to presume, based upon the larger 50% being of this down leg, that this is the resistance that's playing off of. And despite holding the support, got a lot of friends that I care very deeply about that really hope that this holds support. I have to presume that this 50% is going to play out for a retest of the low. Where am I wrong? Where am I wrong and Bitcoin goes up? So in other words, I'm saying that this is the resistance and we are going to come down and retest the low. I know that is a bold, bold prediction considering how the halvening is coming and ETFs are going to be launched and all things that people presume are going to be bullish events. But what if these things happen and then there's no more hype to push it higher? Buy the rumor, sell the news? Where am I wrong, though? Where am I wrong in doubting the one true coin, the true salvation against inflation? We're close. We're actually pretty close to price on Bitcoin getting above the cloud. I use Ichimoku for these kind of sentiments because just as I made the call earlier this year with Bitcoin going over the Ichimoku cloud in, we don't need you guys. There we go. In January of this year, at the same time that it was breaking above the cloud, when momentum was coming out, note how it did one of those things in November before FTX, but not the other. We didn't have that extra confirmation, thus it wasn't a valid bullish signal. That's why I wait for that secondary signal. That was the January start of the whole 2023 trend. No one really wanted to listen because everyone assumed it was dead, and the people that would listen were a little disheartened, the fact that it had gone down another leg. But we're coming to another situation here where it could get back above the cloud and to here. And at that point, I'm not going to go long myself. I'm going to hold on to my short until it gets stopped out above that high because it's still a range. But that would give Bitcoin bulls some optimism. I'm going to go based upon the trade. And the trade is very simple. It's using the 50% of this part of the bear market, that being the high, with the trade set up as a 3-to-1 like so. And I've already actually taken profit on it down this, so mine's a little bit different, but this is the basics of the short trade long-term on Bitcoin. So that is Bitcoin. All right. I think I got some comments on that. So hard to retest 16K again. Why is it hard to get down there? Why would it be difficult? I don't presume that anything is difficult. When we wait, market, we wait all the time. When we can't wait anymore in FOMO, market will make a big dump. That is something that a lot of people do, Nguyen. I think you just need more experience in trading. I saw a lot of memes over the course of the last few months where there's a lot of things on Twitter where people make these memes about trying to trade, you know, cryptocurrency. Be like, if you're not very experienced, yes. But I think what happened was a lot of people, they thought they read a little bit too many people with laser eyes as their profile picture, that you needed to buy Bitcoin right here because you were going to miss out on 100K Bitcoin. And they captured a little bit of profit in here. But then what they failed to see was, again, that false breakout. And then they don't really, they did not account for this false breakout, this hit of resistance right here. They're not going to sell their position because, remember, they're looking for 100K. And then they got slammed by this right here, which they can blame Elon for, but it really just brought it back down to support again. And if you look at it, you shouldn't have been buying it here. you should have been waiting until it pulled back to support and not FOMOing in. The reason you're FOMOing in is because you're reading too much damn Twitter. And Twitter's dominated by people that got into Bitcoin in the last 3 years, and they think they're freaking experts on economics and cryptocurrency. The reality is this: Bitcoin has had, this is the 5th bear market of Bitcoin. The bear markets of Bitcoin go from minus 75% down to all the way to 95%. We're still within that range. And this bear market on Bitcoin could go on, and probably will go on, a very long time if it recovers at all. It's going to go on longer than people think it does. There's too many people out there thinking, okay, whew, everything's fine. You know, I'm just going to hodl and I'll be okay because I'm a secret king and I'm going to be the future billionaire of the world because I see things better than all these other normies. You know, I bought into this cryptocurrency that has provided such an incredible transfer of wealth for such few people in the past, and it's going to happen for me. Why? Because I, a decade after it came about, finally read about it and finally learned about it and joined when everyone else thought it was the best thing since sliced bread. And if we just all band together and buy it and don't sell, we're all going to be okay, man. Well, I don't know if that's going to happen for you. In the course of human trading history, I don't know when there has been an example where masses and masses of retail, traders have jumped onto something late into the hype cycle. I'm talking about the decade that it's been around, and then all become the new millionaires, and all the current millionaires and billionaires became poor because they didn't buy it. I don't know when that has happened. Maybe it will, but I don't think it will. Right now, the savings rate is 5%. And the only thing that really pumps up the price of cryptocurrency is money inflows. And the money printer spigot has been still going, but it has been turned off. It is going less burr. Unless you were out there spending millions of dollars like Michael Saylor, which I read something last week that he recently bought about $187 million more Bitcoin. I don't know where he got the cash, but it begs the question, if he's buying that much Bitcoin, why won't it moon? Who's selling it to him? Where's he getting all this Bitcoin? If Bitcoin is such a scarce asset and somebody dumps $187 million into it, why is my bag not getting lifted? These are the kind of questions that people should be asking. So, anyway, 11K, it's entirely reasonable. 11K is entirely reasonable. And the reason it's reasonable is because, like I said, in Bitcoin's history, there have been multiple down moves. It was very apparent to me that 75% was the bare minimum that this would go down. And I remember telling people that back in 2022 when it was still around 40K. And especially in like real events with friends of mine in real life, I would go to dinner parties with Bitcoin enthusiasts because I've been in Bitcoin for about a decade. And so a lot of my friends are still in it and very active in it. And I wouldn't be the life of the party. Let's put it that way, where I would sit around and they would say like, well, my prediction is, 40K, that's going to be a support. And, we're going to go on up to 300K from here. And I would sit there and say, well, I think that the bear market has started, and the minimum that it's going to go down is 75%, which would take us to about 17K. And then their look on their faces would just be, I could tell they weren't used to hearing that. But it was a totally reasonable eventuality. Now we're in kind of the territory of the crypto winter, assuming that we'll have a summer. And from living through at least two crypto winters before, they go on longer than people think. I know this is a very nebulous kind of esoteric concept because I can't put an actual date on it, but you have to get to the point. Like in the last crypto winter, basically it was after 2017. I remember very specifically being in a lot of discussions with people when we were sitting around Bitcoin at 6,400, and it really hung around here from like June of 2018 all the way to November of 18, almost a whole year. Yeah. And people just presumed that this was the floor for Bitcoin. They presumed this was the floor for Bitcoin. And to be fair, if you bought Bitcoin at 6,400, you're in good shape, aren't you? But Bitcoin still had 50% more down to go. And no one talks about this. No one talks about the reality that every time people think that Bitcoin has bottomed, it still potentially has another halving, not halvening, but halving in price to go. And that's what a lot of people are focused on now is, well, you got to buy Bitcoin now because you don't want to miss the halvening cycle, because the halvening cycle is always made to go up all 3 times it's happened. But counterpoint, halvening rewards, the rewards from the Bitcoin's miners will receive, they're going to get less Bitcoin, meaning they're going to have to sell more Bitcoin to pay for their energy cost. The market may or may not have priced that in. ETF. There's a bunch of ETFs being launched or trying to be launched. And people presume that this is bullish for Bitcoin because people can buy it, in their IRAs or whatever, or they're going to buy more Bitcoin. But what happens when an ETF gets approved and all this built up excitement for the ETF is gone and there's no new news for people to be excited about? What's next? What's the next big news that will drive Bitcoin hype up? Because Bitcoin's based on hype, nothing else. It doesn't produce wealth in itself. Buy the rumor, sell the news. I think when the ETF finally drops, Bitcoin will too, because that will be the event the market was waiting for. It will pass, and now there's no more reason to be hyped up about it. Same thing that happened with Dogecoin. Remember Dogecoin? Right before Elon went on Saturday Night Live, everyone was thinking dollar Dogecoin. Got up to about, 72, 74 cents. Elon went on Saturday Night Live. Everyone was excited for that event. And then it tanked right after it. There was nothing else after that. You got to reverse your thinking. You got to really kind of think about what drives the price of things. It's the hype itself, not the event. After the event, it's not that he goes on Saturday Night Live and suddenly normies are going to be like, oh, wow, Elon said thing about this dog coin. Well, I've actually already heard about it as a joke. Well, I've got my grandkids to worry about, so I'm not going to worry about this, confounded little kids, magic internet money. What do you really expect to happen? You think grandma's going to buy some Bitcoin? You think she knows how to use it? You think the Lightning Network's going to solve that? Sorry, guys. Bitcoin is not dead. It's going to continue to be a really fun speculative asset into the future. But I like stocks. They represent the ownership of companies that actually produce goods and services. So let's go through the list here. Amazon, if we do continue to get a pullback on the stock market, I want to see this thing pull back to, let's call it $113. This I've called the trade of the century because the 50% retracement from the low in 2001 all the way to the high in 2021 was 94.46. Picked some up earlier this year. Come on, who's going to dethrone Amazon? So if we can get a pullback to a 50% pullback of this before it's reached the high, this is a 50% pullback I would be interested in adding to. I've been watching Tesla for such a thing, and it's been a little cantankerous. I picked some up last week at 245, and well, today put it back up. So little DCA into Tesla here, but the main position, which as always, wish I'd owned more, was back at 160, which of course was the 50% from January to there. But let's see what else. Go through these real quick, and then hey, get your questions and your symbols to look at in the chat, and we'll go over them. But we're coming up into the latter phase of it. Let me check chat real quick before I keep on going. Alex Z, not sure, but I think we won't have a CPI print if government gets in a shutdown, which can cause uncertainty. That's a good question. I'm not sure if that part of the government that does the calculations of CPI will not report into work and not report that data. I don't know. I try to really avoid politics in my live stream, except for when it directly affects markets. But I'll say this: I think that history has shown that Republicans are spineless, and they're not really going to hold any kind of major shutdown, especially not now with their low what is it majority in Congress. Um, I don't think they're really going to push the issue. I just don't. I just don't have the faith that they're actually going to. Actually, you know what? Politics wise, let me just go and put this in here so I've got a little platform here. I think that the Republicans should have a government shutdown and demand we pass an amendment that fixes government spending at a percentage of GDP. It's not my idea. It's Larry Elder's. I think he's a very good, prominent, should-be politician, but probably too good for the office. But that's his idea, or at least one that he's been kind of championing. But I really wish that that was what we would have a government shutdown about, to fix government spending. But we're not going to have that. What's my opinion about seasonal effects? I'm actually glad you asked that because you made me remember something So seasonality, this is one of the articles I brought up on gold for this live stream here in my prep, but I didn't really get to it because it was a little more esoteric. But I really do like seasonality. Here's an example of seasonality where they come up with, what gold did in September. So historically, gold in September is very bearish. And so if you look at a 10-year history, 9 out of the 10 years, September was a bearish, it went down month for gold. That's powerful. Is it eminently useful? Not really. I've tried to trade seasonality in my trading career many years ago, and I do not discount it because it is a statistic, and you don't know what the underlying factors are in the seasonality. You don't know why it does it this month versus another month, but you can go back in history and say, well, there's a high probability that this month, this instrument will be down or up. And I would say that if you see that in conjunction with another technical setup, that can give you extra confidence, or it can make you more aware that month to be looking for setups. In other words, if we knew going into September that it was a very bearish month, let's just do that. So, short answer, my opinion about season effects is that they are useful, but I don't use them on a regular basis to tell you exactly how, except for this, where if you look at the seasonality of certain instruments, like let's just say gold, we go to Friday, September the 1st on gold, and we sit here at the beginning of the month of September and we say, okay, I know that gold is seasonally bearish in the month of September. So every day, let's just say that we bring up a 1-hour chart and we look for, an Ichimoku breakout. So September 1st, we look for price to be below the cloud at the same time that the momentum is. We take a short position, make it like so. Let's see if we can get it down to the 50% of this. That could set us up for a pretty nice little breakout trade. Can we get a 1-to-1 there? Close enough. Just for example's purpose, I'm not going to get too granular on it. And then, capture a little bit of bearish action, have a trailing stop, and play it out as such. Find yourself another bearish position, and you can carry it through. This is, of course, hindsight now that we know that September was bearish, but, getting the seasonal data, I think one of the things is most of the time people charge you for it because they're taking the data and crunching it. But if you tried to find only bearish setups because you knew the seasonality was bearish, clearly you would have had a little bit of an edge in September. So I do encourage people to study it and find some kind of methodology around seasonality if you have access to that kind of data. So yes, my opinion is positive about seasonality because it does work 90% of the time, it works all the time. Put it that way. All right. BRICS overtaking the dollar was the biggest case of those world-ending scenarios. Yeah, whatever happened to that? Whatever happened to BRICS? I'm sure that people will say it's still going on, but every week, man, they've got to come out with something to scare you. They got to keep you reading so that you see the advertisements, hear the advertisements. And meanwhile, the actual opportunities come when price hits a major support or resistance. I know they've been talking about the dollar going to fail for all time, but dollar's still pretty damn positive. It's coming. It gave a little false breakout here in the summer, but 102 still remains that level, and it's trying to make its way up to 107. Oil is one that actually I think we need to start looking at potentially trying to find resistance, because it has come up, well, actually it's come up broken that level there, 89 level. I'm actually having a hard time deciding between using the adjusted contract changes and the unadjusted contract changes on futures. It's giving me some grief. I still haven't figured out what I'm going to use in that case, because clearly, depending on which one I use, the resistance is very, very different. If you look at the unadjusted contract changes, 93 this week was a very powerful resistance on oil. But if you look at the adjusted, it's actually come down as support. I don't like it that I have these two things to look at. Still haven't figured out how to square those. Stocks are a lot simpler, though. So Netflix is the short position. That is the one that we've been talking about for a couple of weeks. Somebody told me this week that they're losing subscribers. I don't know if that's true, but the basis for the short is hitting that 50% retracement with a spike in July, and we got some more bearish action this week. All right, back to questions. Let me go through Casey's and actually answer the question. Do you think Bitcoin will go all the way down to zero? See, Bitcoin is kind of like an NFT. You know, you can't create more of it, and there's a lot of people that really like having it. So I think that the value for Bitcoin is definitively not zero, unless something happens with, breaking the blockchain, which is, I've been assured by developers, impossible, but who knows? As long as it is scarce and you can't reproduce it and people have a positive feeling about it, the price of Bitcoin will be not zero. It's not zero. And of course, what Bitcoin maxis will go to the extent of saying is that, well, the dollar is fundamentally worthless. It's going to go to zero eventually, because eventually all this spending will catch up to us and inflation will bring us down to a zero worth dollar. So the risk on Bitcoin is zero. There's functionally no risk on Bitcoin, is what they will say, because Bitcoin can't be zero. And I believe that the best way to say that is Bitcoin is always going to be a non-zero value, but is it always going to be something that people will trade one of them for a car? Like the utility value of Bitcoin is wealth storage. And so far, it has been very good at that. But it competes for other ways of storing wealth. And right now, it's in competition for a 5% savings rate. So you take a 5% risk-free savings rate if you put your money in a savings account, or Bitcoin, which has a realized volatility of, I don't know what it is now, but it's definitely double digits. And people are very smart if they consider the risk. I mean, yeah, 5% isn't much to make on your money, but it's a lot better than losing 50%. And I think at any given time that you buy Bitcoin, you need to presume, not assume, you need to presume a 50% drawdown could immediately happen after you buy it. If you're comfortable with that and you really want to have that potential 100, 200, maybe even 1,000% return, that's fine. But any money you put into Bitcoin is at risk by about half what you put into it. And history is fraught. And I just used one earlier in this live stream to show that when people assume everything's fine, you still have to presume that there's a 50% on the horizon. And that's just the reality. I'm not saying it won't go up 1,000%, but that's what you need to consider in your investment. And I know that's not what people want to hear. And I know that's not what Bitcoin maxis want me to tell people. Bitcoin maxis want to only have bullish cases so that people will buy Bitcoin and lift their bags and make them richer, make them into the secret kings that they think they are for somehow divining the proper future of money. But just be aware, look out for yourself and understand the actual risk of it. But going to zero, no. Going to 16K again, very likely. Going to 11K, possible. Going below that, I would say it's kind of a low probability, actually. So those are my predictions for the future. Going back up to reach the high of 60K could take many years. I really think, Elon Musk has a quote that I think is something like the most humorous thing to happen was the most likely. And I got to hand it to Michael Saylor of MicroStrategy for really putting not his money, but other people's money where his mouth is, and being a vocal proponent of people mortgaging their homes to buy Bitcoin and lifting his value up. But he has been buying a lot of Bitcoin on borrowed money using all kinds of interesting financial tactics, which Bitcoin maxis praise him for because he is so vocally trying to pump their wealth up, ignoring the fact that it defeats the whole Bitcoin ethos of being outside the financial system. But a lot of this borrowed money that he has purchased Bitcoin on has maturity dates, bonds or loans, depending on what they are, that start to really come into play in 2025. And, when he took those out, that was, back in 2020 and 2021. And so for him to think, okay, I'm going to take out debt where I don't have to worry about paying it for 4 years, that made sense because every Bitcoin winter, every Bitcoin bear cycle before it had lasted only about 2 years, 3 years at the most. So he took that debt out. The history says 2 to 3 years this bear market cycle could possibly last based on history. And I'm going to give myself an extra year buffer just in case it goes on a little bit longer. So that's, in my mind, as a trader investor, that's why he did that. That's why he put this maturity out to 2025. But that sets up a situation where, wouldn't it be ironic if this bear market lasted through 2025 and he had to start selling Bitcoin to pay off his debts, pushing the market lower? Because I'll tell you something right now, I don't care what a mortgage broker tells you about interest rates, you're not going to be able to refinance this mortgage lower for next year. Interest rates are not going to come down back to normal of 3%, which everyone got used to, anytime freaking soon. So you're not going to be able to refinance the debt that anyone took on at the beginning of this decade, 2020, 21, 22. You're not going to get those interest rates probably in this decade. I don't want to make wild prescriptions, but it's very unlikely. Just too many people think it's going to happen. Let's put it that way. And so he's not going to be able to refinance his debt. And so if Bitcoin stays in a bearish cycle below his buy price, he's going to have to start paying back this debt. And his company, MicroStrategy, their business intelligence software, whatever they do, they don't make nearly enough to pay these interest payments. They don't. So he's got a big old bet that Bitcoin is going to go up before 2025. And it makes sense for, the bear market cycle. It makes sense for the halvening cycle. It made all kinds of sense. But man, is the history of finance not littered with genius failing. And so I think the most humorous event would be that the Bitcoin winter lasts through 2025 into 2026. And because it's so low, he is forced to capitulate, sell, pushes it lower. If we actually did have a recession, if we did have a major economic event, there is ample evidence. Just look at March of this year when banks, not Bitcoin, but banks, TradFi was in trouble. You had a 20% haircut on Bitcoin, 20% pullback, great buying opportunity. When there was a major economic shock narrative this year, Bitcoin dropped 20%. When we had COVID made Bitcoin drop 60%. Your opportunity to buy Bitcoin will come, trust me. And it's going to come when everything else is looking like bleak and dire. And at that point, you have to have the wherewithal to actually pick it up. But it's going to be hard because the sky is going to be falling. I think a lot of people sit here when times are good and read about the potential doom on the horizon, thinking that they're preparing themselves for the doom. But the real major events are things that nobody can predict. And they come as a shock, and they scare the hell out of everybody. And nobody wants to buy anything because they're scared. And I think people have the false notion that if they just educate themselves about it, they prepare themselves for it, that when it happens, they're going to have the confidence and the strength to make that buy of their lifetime and get rich off of it. But nobody does, because the actual events that cause major down moves in markets are totally unexpected. That's what makes them so hard. And everyone's scared. And fear is contagious. And you too, me as well, are going to be very, very uncomfortable buying anything when that happens. There's really no preparing for it. But it makes for excellent content if you want 100,000 people to say that stock market's going to crash, real estate's going to crash, and Bitcoin's going to move. People love to hear that kind of stuff. All right, let's go back through some of the things. So, got to give Casey his due. All right, so JBL, what breakout you got for me, Casey? JBL. Making higher highs. I'd say so. CCCS. How do you find these, by the way, Casey? Do you look for things making new highs or new 52-week lows? Not enough price action here. Are you trying to get it breaking the 1344? Okay, yeah, try to break that high. Okay. All right. So, Alex says, as BTC won't go to zero, nor will the dollar, but countries outside the USA sure aren't happy about money spending and inflation. That's the case for BRICS. Well, I mean, they can be not happy, but, you know, where are the wealthy, where are the elite going to send their kids to school if they can? You know, where are people going to try to move for a better life? I mean, right now it's still the United States. Fortunately for us. And I think we're rightfully, being an American, we are rightfully paranoid that might change. And I say rightfully because we don't need to get complacent. But I think that this is still the best place for innovation. I think the laws here, depending on what state you're in, are still the best for business. And despite the fact that we're printing lots of money, if you compare it to China, it's far more stable, predictable currency situation. And you have countries that are more likely to be stable, like Canada, but they just don't have the GDP to, you know, lubricate the entire world economy with their currency. So America's still the best. It really is. It's like democracy. It's the worst, but the best of all the things out there. All right. Well, guys, let's take a look at some. I got one more in here from Cornell on Discord. By the way, guys, I do this every Friday. Thanks for joining me if you did. If you're catching this late, I do this every Friday. And the links to everything are below. Join the Discord. It's free. Send me a message for Spike Indicator. It's free. I may start charging just so that people will actually value it, because that which is given has no value. So this is the FTSE UKX UK 100 index. Looks very slow. I don't see a particularly strong trading level here, not like I do on the S&P 500. That's going all the way back to 2020 to here. That's on the weekly. On the daily, caught in a range. I would say you just have to hodl. You have to hold and not let it break the lows that it's made over the last 2 years. Looking pretty strong though. I guess. Well, it's not. We didn't have a major. What is it? 2022 for the UK stock market looked to have held its value pretty well. That's good. But I don't see a tradable setup here. It's just kind of holding in place. I can't tell you when it's going to break out one way or another. That's just a consolidation. That's why I like to look for trends. All right, what else? What else kind of questions we got here? I think that wraps it up. All right, thanks everybody. Have a great weekend. Trade wisely as always, and hopefully we'll see you next week. So take care.